Hello and welcome to Taking the Bias Out of VC Investing. I'm Kamal Hassan. I'm one of the founding partners of a fund, Loyal VC, which invests in a different way.
Hi, I'm Shelley Porgas, and I'm the co-founder and managing partner of Beyond the Billion, a global consortium of venture funds that have pledged to invest more into women-founded companies.
And hi, I'm Mariah Lichtenstein, the founding partner of Diversity Ventures, where we're capitalizing on diverse perspectives.
So let's start the conversation off with the data about VC funding and who actually receives the money. Mariah?
So actually a full 82% of venture-backed founding teams are all male. Only 6% are all female, 12% are mixed. Also of the US population, we know that 13% is Black and almost 17% is Latinx, yet less than 3% of venture-backed founders are from these ethnic groups.
Yeah, and to add to that, of course, this past year, as we've been facing some challenges with COVID, what we found is that female-founded companies, though they continue to outperform both in terms of increased valuations and early exits, which of course all investors usually look for, despite that outperformance, have found that the funding for female founders has declined by almost twice the rate of the decline in male-founded companies. That is 31% decline for females and 16% for males.
All right, so those numbers are pretty shocking. I mean, when you hear what a tiny percentage of diverse founders are being funded by venture capital. So let's start off with the question, is it possible at all that this distribution is actually completely merit-based and it does reflect merit?
Well, that's something that we hear a lot in Silicon Valley, right? Or we used to hear that it's a meritocracy. I think a lot has changed since George Floyd. Silicon Valley has been the epicenter of technology startups, but actually what we found is that in a Kauffman Fellows research report, that's called Deconstructing the Pipeline Myth in the Case for More Diverse Fund Managers. Neither education, the number of underrepresented founders in the pipeline, or performance could explain the underrepresentation of Black, Latinx, or female founders.
Yeah, and look, for me, the data is just pretty simple. If I remember correctly, it's something like 3% of VC-backed companies, or 3% of dollars go to a company with a woman CEO. And I could sit there and go, okay, well, either there's 97% amazing, talented men for every 3 talented women, or we're somehow missing things. And in fact, if you go higher up in the system, I've done a lot of work with accelerators, and in most tech accelerators, which are high-tech companies, you see on the order of 30 to 40% of the people coming through these accelerator programs who are, companies are led by women. So if it's 30 to 40% at the accelerator level and 3% at the actual got funded by VC level, there's something seriously wrong going on.
Totally.
And we should mention too, there's been an often cited McKinsey report that showed that companies that are in the top quartile of gender and ethnic diversity are more likely to outperform. So we often see that. But one of the things that's come up lately, and this is more about like implicit bias, is that there's this concept of homophily, where people tend to invest in people that are like them and concepts that they can understand. And if you're going to make money anyway, people want to make money with their friends, with people that they're familiar with. And so I think there's a lot of inefficiency that happens because of the way that we've gotten comfortable doing things.
Yeah, and if I may just build on that, homophily is what in venture we often call pattern matching. And that is, we invest in people who look like us, who sound like us, who went to the same schools that we went, et cetera. And so indeed, we find that many populations are excluded as a result of that, because the venture, the group of venture investors, it is very much, not only monopoly, it is a sort of monopoly, but it's also very homogeneous.
Yeah.
Well, in fact, I would argue that the venture process involves a lot of sort of snap judgments, which are prone to bias anyway, but we'll get to the venture process in a second. Let me just sort of flip for a second to what the lived experience of entrepreneurs is. So me, I'm a white man. I don't necessarily get to experience bias the same way as others do. I hear stories about it, but Mariah, I don't know if you want to share, for instance, have you ever, I mean, it's easy to say the data says there's bias out there. For someone like me, I don't experience that bias. Have you experienced that bias, and what does it look like to you?
I've experienced it in so many forms, both, explicit and implicit. And a lot of times we like gaslight ourselves, right? Like I often say, I thought my mom burned her bra, or that, Martin Luther King and Malcolm X died so that I wouldn't have to deal with these things. So we're kind of shocked, when we do. And sometimes we look at ourselves like, is it just me? And certainly it's hard for all founders. But, one of the examples that I've shared with you two before is I was in a pitch competition, a pretty prominent pitch competition here locally where I live in Sacramento, California. And one of my slides involved diversity statistics that impacted the industry that I was presenting around. And at the end of the competition, I didn't elevate to the next level. And some of the people who had put on the competition, who were, very big supporters of me, were really disappointed. And one of those mentors came up to me afterwards and had mentioned that among the judges, and there were 2 Black judges. There were, there was 1 female judge, at least that I recall. But one judge had specifically mentioned that diversity slide, and it triggered him. He was very upset about it. This is like 2015 or 2016. So we hadn't done as much of the work as we've done now. And she just asked me, why would you include that? Right. And so it was like, I could not bring my full self. I couldn't bring my full why to my business model and advance in that context. So that's just one personal example. And, there's another, I want to cite this article in the Harvard Business Review by James Norman called A VC's Guide to Investing in Black Founders. They give some other examples. And yeah, I have anecdotes for days.
And if I can just build on that, this has happened in many forms, but one of our funds shared with us a story. They were raising what's called a femtech fund, that's female health. Well, right there's so many aspects of female health that white men just don't get, and we wouldn't expect them to get it. And so if they haven't gender diversified and otherwise diversified their own investment team, which few have, we know that to be true, they just simply don't understand the experience and they don't see the opportunity. And how could it not be an opportunity when 51% of the population is female and that the products or services that we're talking about here are female? So for example, one where it was a female health product and service, the guy said, I think I should get you to talk to my wife. And so the founder said, well, is she an investor? Seriously, buddy, what are you thinking here? I don't know. But anyway, these are the kinds of things that are real stories, that founders face.
And by the way, it's worth mentioning.
Pregnant on me? Are you, do you have kids? There was this panel that I went to in LA, and it was a room full of women. It was 4 women, and there was this one VC on there. And I asked a question, and mind you, I'm married, I have 1 child. And he responded with a rant that there must have been something within him he wanted to get out. And he actually had a female co-founder. And he said, basically, if you're a single mother, you cannot launch a startup. And I'm like, wow, okay, where did that come from? But how?
Well, I think you should follow up with him and point out to him that the hottest IPO on the market now, Whitney Wolfe Herd, Bumble, which just announced, right? And they're going to have an over $2 billion valuation at their latest price point that they're talking about. She is first of all, she's the youngest woman to ever, IPO her company. Second of all, she has a 1-year-old child. And there's this fabulous photo of her around the thing, showing her signing her IPO docs with her baby on her hip and, whatever. This is how we function. I was a single mom for a long time in my life. And, I ran some very big companies and did very well. We figure it out. So, if you ask me, if I hear a woman is single and a mother and starting a company, I think she's the one I want because she's been through so much shit.
She's got a reason.
Yeah, she's going to be amazing. And P.S. Some of our fund, our VCs and our consortium have reinforced that thought that they see, like for example, at the beginning of COVID, that when we went to talk to one of our largest VCs in Asia, and asked him, and it was him and his, it's $1 billion plus fund. And we said, so how do you think your companies are going to do during this, upcoming, pandemic? And at that point, we didn't even know what was going to happen. And how do you think the women are going to do? He said, the women are going to do great. In fact, they already are. They're pivoting faster. They're preserving their cash. They're doing everything they need to do before we even come to tell them that this is what they have to do. So he says, I have no doubt that the women are going to do great, despite these challenges, and in fact may actually, will find opportunities in this challenge, in these challenging times.
We've got 50 of our 150 entrepreneurs to date. 50 of the companies have a woman CEO. I personally am completely agnostic about whether women will do better or worse. I think it doesn't matter who you are. I do remember, though, you were talking about the single mother. We funded one of the companies we funded. I remember meeting the entrepreneur for her pitch in Silicon Valley. It was just a meeting, actually. We don't use pitches. But she walked into the meeting and we were writing our first check into her, and she was 7 months pregnant with her first child. And it was like, okay, so what's going to happen with her business when she has her child? I don't know. Will it succeed because she focuses on it more? Will she change her? I don't know. But it certainly seemed like an interesting business and worth putting some money into. So yeah,
Can I just add this? When I became a mother, it really increased my drive, because now it wasn't just me that I was doing this for. It was also for her, not only setting an example, but closing this 10x wealth gap, right? Like for her to have more opportunities. And I also want to point to that, with people of color, and this is, I think, very similar to what Shelley mentioned with women, because equitable funding is not there, founders of color have tended to prioritize revenue. And I think that's part of the reason why you see this outperformance, because they're forced at an earlier stage to make the sales, to test the assumptions. And, it's such a bigger risk when you're coming from an inequitable background, right? When you don't have equal access to friends and family, or whatever the case may be, you have to reduce that risk fast and early by generating revenue oftentimes. And so these are just some of the ways that you see women and people of color, underrepresented people of color specifically, kind of outperform.
So all this talk of optimizing returns and sort of better returns from women founders of color leads to an interesting question, which is VCs will often say their obligation to their limited partners is to invest in the best entrepreneurs, and they don't want to set any targets because they want the best entrepreneurs. Are they failing somehow in their duties to their LPs by not investing in women and founders of color?
Well, that's what some of the VCs, not only the VCs in our network tell us, but actually the LPs, the limited partner investors into those funds, also tell us. So, for the VCs, what they're clear on is that investing in women is a tremendous opportunity that not everyone's taking advantage of, and so they should, and that it really helps them deliver on returns. For some of the LPs we've talked to, I'll give you two examples. One quick one is a very large, well-known institutional LP that told us that they did a review of their fund managers, and they found that 40% of their female fund managers were also disproportionately investing into female founders, were in their top quartile, and another 33% in the second quartile, meaning 3/4 were in the top half, and that's almost unheard of that any single group would perform that way. So they were quite happy with the investments that were being made without any specific mandates. And a number of smaller pension funds, they're still large pension funds, but they're not the CalPERS of the world, but shared with us that they had migrated to both venture and to venture, investing into female founders, because they saw that it helped them make their numbers when in a low interest rate environment, when they couldn't necessarily do it all in the public markets.
It's when I actually look at the data slightly differently, but come to the same conclusion, which is I start from the departure point that that men and women can equally potentially be good entrepreneurs. And for me, if you've got a situation where you're funding 97 men for every 3 women you fund, you're going to have the sort of the marginal woman who didn't get funded is going to be a lot better than the bottom sort of half of the men you did fund. So that therefore, of course, women are going to outperform. For me, it's economics 101, that you don't fund enough women. Of course, the marginal women you add in are going to outperform, and that's the way for your fund to outperform.
You know, this kind of pushback that you cite, Kamal, it just is a reflection of cognitive bias, right? Or cognitive dissonance, rather, right? And what we do with cognitive dissonance, and I've heard a couple of examples even on the LP seat of this coming up. You know, you hear information that's contrary to what your value system is, what your tightly held beliefs are. And rather than just being able to process that with like a critical thinking kind of framework, there's a way that our brains try to justify it. And sometimes it will even create mythologies to justify that reasoning, where you have the data right in front of you and you still say something else. And so, you know, this is what we're seeing, you know, but if we have a fiduciary responsibility to our LPs, and LPs specifically like pension funds and others have a fiduciary responsibility to their clients, then we have to look at the fact that, you know, we are not seeing a difference that is tied to gender or ethnicity in those being less competitive. We're not seeing that. It's an excuse. So, you know, what we are seeing is that there are barriers to entry. And in the startup world, we call it, what's your moat, right? What is your competitive advantage? What is your unfair advantage? And what you see right now is the status quo is a reflection of unfair advantages that have been systemically put in place. And whether or not we retain the cultural memory of that, that's what it is. And so, yeah, I think we just need to get away from the excuses and support people in moving past that cognitive dissonance.
So if we talk about that cognitive dissonance, one potential solution is to change the investors. And if you have, well, that's actually the question is, should we be looking to change who invests? Should we be looking for more diversity in the venture capitalists themselves?
Yeah, I mean, the industry, only 1.4% of those making the investment decisions writ large in the asset, management industry are women, people of color, or both. So, obviously that's ridiculous. I mean, we're talking about, population of 50% female in the U.S., 15% Black, more than that, Latinos, et cetera, et cetera. We've got to get to a point where we recognize that talent is universal, but opportunity is not. And, and recognize that and create the opportunities that will allow, people who are talented in this particular field to rise in this field, and others who are talented in other ways, whether there's entrepreneurs or as technologists or whatever, to rise in theirs. So.
Absolutely. And I should point out that the National Venture Capital Association and their nonprofit spinoff, I think it's called Venture Forward, they've partnered with Deloitte and they've put out a beautiful interactive data set that shows diversity within venture capital. And you can look at like older firms, which tend to be less diverse versus the newer firms. So you have a higher percentage of women and people of color in the newer firms that are less than 5 years old or 10 years old. And so, yes, there needs to be more representation there, but there's also barriers there. And what's encouraging is that in these past, weeks and months, I've heard LPs start to be willing to look at some of the things that prevent more people of color and more women from entering the VC ranks. And for example, that could be, GP allocation to a fund if you've spun out from another firm, or if you've not come out from another firm. If you're not being hired equitably into existing firms, how are you supposed to spin out from a firm and have an attributable track record? Or if you are coming from a place where there is a huge wealth gap and there's disparities in even the wages, then maybe not everyone is going to be an angel investor and have an attributable track record there. But are they able to win extraordinary deals? Are they able to add value to the founders that they're working with in their portfolios? And so I am encouraged, and actually Sapphire Ventures put out a podcast with Carter recently where they talked about how they're, looking at some of these things and changing some of their heuristics and how they evaluate emerging managers that they're investing in. So I hope that trend increases, because if we just say, oh, well, we're just going to let in operators of high tech companies, there may be some amazing emerging managers that come out of high tech companies as operators, but it's not going to move the needle if we continue trying to limit where these new managers are coming from.
Mm-hmm.
No, it's certainly something which is interesting for me to deal with. I know that ILPA came out with their guidelines very recently, and a lot of the guidelines look precisely at this question of who is doing the investing. If you look at our performance as a fund, as I mentioned, 50 out of 1 out of every 3 CEOs we fund is a woman. And we've also got very good minority representation. We're a global fund, so it's very hard to define minority stats appropriately on the global basis. But the one of the things which we look at is to say, look, when a pension plan is investing their money, 80% of the money is going to, over 80% ends up in the pockets of the entrepreneurs to build their business, and under 20% stays with the manager of the fund itself. So from our point of view, diversity of fund managers is a good thing itself, but I wish more people looked at the question of how do you make sure women and people of color end up receiving that money as entrepreneurs rather than focusing solely on the investors. And let's look at what the investors are doing rather than who those investors are. Certainly, I mean, one of the things we've seen, and I think this just speaks generally to the solution here, is there are a number of funds, our own included, that really try to invest in people based on how they perform over time. So there is, there's a fund called Clearbank out of Toronto. It's around the US right now. And they basically say to people, put your data into this spreadsheet, and we will fund you blind based on the data from your company. And surprise, surprise, when you do that, 30 to 40% of the people they fund are women. Mm-hmm. And I think the result is there's this real bias in the venture capital process, which says we fund pitches, because when you fund numbers, you get a leveling of the playing field. So there really is a problem in the pitch itself. And the fact that we are listening to pitches and venture capitalists are making judgments about who's going to succeed based on how they stand in front of a room and whether they impress them. I mean, you were talking about biases, Mariah. I think this is exactly the problem, that there's this cognitive bias that we think a venture capitalist can predict the future, as opposed to simply sitting back and judging on performance and data rather than our visions of what we think they'll do in the future.
And even on that basis, think about it too. There's structural barriers and then there's bias, personal bias. And both exist and both work against the optimal results and the best returns for investors. And that is both at the entrepreneurs level as well as at the VC to the LP level, meaning those investors, whether they're high net worth or institutional investors that are investing into funds, also have those. So for example, on the institutional investors into the funds that will invest into a diverse set of founders, what we see is that, size of fund may be one of the requirements. Well, size of fund by its very definition is going to be a more established fund / more white male run, period, right? Or, length of time in business or the things that essentially would reflect long-term institutionalization are the things that, while they quote unquote reduce risk, if you want to think of that way, and that's why they were built into the system, actually are increasing risk, the risk that you are not going to optimize for the future. So it may have worked in the past, but you know what? The world is changing and it's not necessarily going to work for the future. And in fact, it doesn't. And so, like I said before, many of these pension fund managers are telling us they didn't used to invest in alternatives. In fact, I remember 15 years ago in a startup I co-founded with a guy named Tom Weisel, a big tech entrepreneur and investor in the Bay Area. We had CalPERS as one of our investors. And at the time, they were only doing about, I think, 5% of alternatives, and VC was that little bit of it, 0.5% maybe at the time. Today, it's 15 to 20% of many of these pension fund portfolios. So, but it's still based on old kinds of criteria. So I think, we also recognize that it's not just personal bias, it's structural barriers that are built into the system that are really creating barriers for not only for new entries, but ultimately for better results in the long term.
Absolutely.
So one of the ways of dealing with that structural bias is to come up with funds which are sort of gender or racially themed funds, which only invest in women founders, diverse founders. What are your views on that as a solution?
This is a conversation that just came up the other day with the VC, and we really have to look at the pros and cons, especially pre and post George Floyd, right? So I would say that the pro of having a set aside or dedicated fund is that it's signaling that we want you, you're a safe place, we're working on this. And so it may attract more deal flow. And so, like, to your point earlier, Kamal, around, you're not a person of color per se, but you are you're not being biased in trying to, exclude women or people of color. You're being very intentional about that. But, by virtue of the networks that underrepresented venture capitalists have established, and by the signaling that they represent to founders, they're going to attract that deal flow. And so, when you have a dedicated fund, it does do that. You could do some benchmarking on that fund versus, an integrated fund. But at the end of the day, I think the goal is that we won't have to be set apart, right? The goal is that, and like we say with Diversity Ventures, we're capitalizing on diverse perspectives, and diversity includes you. So the hope is that we can be integrated and that we can leverage each other's perspectives to have stronger outcomes. But I won't say that the dedicated funds are a bad idea in the current climate as we do the work to get past these biases and to signal that, this is a safe place where we are doing the work. Because frankly, when you're going into a room where, LinkedIn put out a study that 40% of venture capitalists believe that diversity is spoken of too much in the news, right? And this is a few years ago, so hopefully things have changed. But that means if you're a woman or underrepresented founder walking into a room on Sand Hill Road, you have a 40% chance of, this bias, being in the back of a founder's or of a funder's mind just by looking at you, right? And if it's a dedicated fund, you have a greater assurance that you're not wasting your time going into that room. You're not subjecting yourself to microaggressions and toxicity that unfortunately women and people of color disproportionately experience.
Mm-hmm. Very true. Well, I will also add that, I think there's a place for focused funds, and that is, when we're looking at healthcare or other sectors where it does make a difference if the founder is a woman or a founder is a person of color, because they're addressing some of the community. And that doesn't mean that nobody else could address that community. It just means that the person who's more likely to have had that experience is more likely to be able to come up with the solutions for that community. Having said that, we are very much believers in diversity writ large, gender and other diversity. And as such, when we launched the $1 Billion Fund for Women as the first step, our definition was always not just female founded companies, but gender diverse companies with at least one female founder, because again, we recognize that, there is power in the diversity of our experiences and bringing that to bear on decision making. And that ultimately, to the degree that we are all returns-based investors, we want to see the optimal returns. So Kamal, your approach, the approach of Loyal VC, we know because you're partners of ours, is a very gender neutral, as you like to call it. I would call it gender positive, not because you're making, intentional choices for gender, but more that you're making choices for the outcome, based on the outcomes. And it's no surprise to me that you're finding a disproportionate share of the companies and the CEOs that you're investing in are women, because that means that the equations are working out.
Thank you very much for that, Shelley. I mean, it's a great statement about what Loyal is doing at the moment. Let me give each of you a chance to talk a little bit about what you are doing to address changing the changing diversity of funding. And Shelley, maybe we'll start with you.
Thank you. Well, I've already mentioned we launched the $1 Billion Fund for Women in 2018 to inspire and catalyze capital to fuel women-led innovation, and to inspire venture fund managers, whether they were running gender lens funds, that is exclusively investing into women, to do more. But most importantly, to really, normalize, if you will, investing into diverse founders, including women. And what we found is that we believe that a pledge campaign, not unlike the Giving campaign, a Best Efforts pledge campaign, would be a good mechanism. It's not the only way, but it's one good mechanism to catalyze that, because we were seeing not only in 2017, when 2.2% of venture funding was going to women, only 2.2%, and only another 10% to any company with even one woman founder. Thus 88% going to all male founding teams, all white male founding teams, I should say. That we were going backwards. It had been up to 7% in 2015, and we were going backwards. And so it was like, this is crazy. We can't wait till, all the venture funds finally hire women and mentor them and train them and, let them rise to decision-making positions. And that's going to take at least 15 years. Like, we need change now, because all these women are innovating. We're seeing incredible things happening, and they're not getting funded. And therefore we, as a community, as a world, are not benefiting from their innovations. So this is what motivated us to say, we've got to ask them for a pledge now. And kind of like what Bill Gates, when he looked at that, and, with Warren Buffett, I think, they got together and said, let's ask for the pledges from these, billionaires to say, we got to make changes now. And thankfully, we thought it would take us a decade to get to $1 billion. And we mobilized over $1 billion in pledges in under 9 months. And believe me, no one was more surprised than we were. We used to joke that we were 2 girls and a truck. We are now 22 people on our team globally. And thanks to Kamal and others who have been so supportive of us. So, so we think that, making a commitment, very intentional, and then modifying our approaches in order to fulfill those commitments, whether it's the kind of approach that Loyal VC takes or others, to make sure that we fulfill it. We are now doing our second survey of our funds, and we look forward to seeing how well they have met their pledges and their goals.
And Mariah, clearly you have a fund which has got a very sort of open. It's actually wonderful that both of us have funds which have very diverse, and for us, diversity means all kinds of entrepreneurs, no matter what their gender and color.
Exactly.
But do you want to talk a little bit about the things you're doing beyond your fund?
Yeah. So, and I would mention too that even in the name Diversity Ventures is a double entendre there, that we need to diversify beyond Silicon Valley, which we're now forced to do because of the pandemic. But there was this heuristic, like, Silicon Valley is Mecca. You must come here to be taken seriously for us to invest in you. And so I'm really glad that the zeitgeist of the times is supporting that thesis as well. But in addition to our fund having that really inclusive lens, not only are we very much interested in women and underrepresented people of color, but we're also very supportive of founders that may not come from those backgrounds, but want to build diverse, equitable, and inclusive teams, and supporting them when they may not have the same kind of network that someone like myself has. We have to provide that support for them as well. And that can bring, diverse operators, onto cap tables, diverse advisors, diverse investors, right? And that improves, the network effects altogether, and that ultimate goal of us being able to capitalize on diverse perspectives. So in addition to that, I've launched the Tech Funding Equity Project, which is at techfundingequity.com, out of the Aspen Tech Policy Hub, to address some of the systemic issues that cause the funding gap for women and underrepresented people of color. And so with that, I particularly was interested in, how might we close this funding gap that occurs even before founders are VC backable, and that's at the friends and family round. So I mentioned the wealth gap earlier, and not only is there a wealth gap, but some very dated rules that are within the SEC that have been kind of a topic of conversation of late around the accredited investor definition, and how it creates separate and unequal criteria around, both offering rules, what kind of offering that you can have given your network, and also, who can invest, and, based on your net worth or your income, whether or not you can even participate in a certain type of offering. So for example, if someone was doing a general solicitation offering right now, it's limited to only accredited investors. And so if I'm a friend or family member of that investor, of that issuer, that founder that's making that offering, and I don't meet that criteria, I'm entirely excluded. And so there's some things around that, and I'm all for investor protection. I was formerly FINRA licensed, but we're doing some work around that with the SEC. Also, somewhat similar, but a little bit different from what Shelley is doing. We have an opportunity pledge, and we've now rolled out a startup DEI pledge, which includes a framework of supporting limited partners, venture capitalists, angel groups, and others in the ecosystem that support founders in, evaluating those heuristics that keep, people of color and emerging managers from having equitable opportunities. And so part of that could be, we have a framework that includes suggested activities, and that could be like starting a venture partner program or having an apprentice program. And I want to say with that, I really, I've heard a lot of people talking about doing these kind of programs and wanting to bring in like college grads and really young people. And that's great. But we have to also be careful not to fall into ageism, because I'm not a spring chicken. I've been, working to get to this place for many, many years. And there's others like me that have been in the ecosystem for a long time, developing deal flow, adding value. And we have to find pathways for reentry, especially with women who have different caregiving experiences, different career pathways, being mothers. We've gotten to a point where we're like freezing eggs in the tech ecosystem, and that was big news. But so we have to be like really mindful of what are the stereotypes that we're bringing to the table. And that's what this pledge and the supported framework is designed to do. And we have a tech-enabled approach. We've recently partnered with M-Train, which is a female-owned, VC-backed culture analytics platform, to help support this initiative. So those are some of the things that we're doing to address the systemic issues.
I've been a big believer in a long time, by the way, about the investor protection rules being incredibly biased to allow the rich to remain rich and the poor to not have a chance to climb up the ladder. I mean, you look at Elizabeth Holmes, and because her friends and family are wealthy, she can raise all sorts of money into her business. And yet, you look at an Amazon, at Jeff Bezos, his parents invested $250,000 to help him launch Amazon. What about the rest of us who don't have that sort of wealthy friends and family around us? And that was actually one of our inspirations originally behind Loyal VC, was to really say, how do we help people get that first step onto the ladder, which, by the way, is a really smart thing to do as an investor, because if you say that talent is distributed equally by gender, by race, and by wealth, then there's a lot of really good entrepreneurs who don't have wealthy friends and family who you can do very well in funding. We actually, I got a little talking to recently on our pitch deck. We recently funded a company in Nigeria. And it's one of the companies we feature on our pitch deck for our fund, because they've been growing their sales month over month by 50%. So you see this 50%, 50%, 50% sales growth. And to us, it looks like an amazing investment. And we've done a bunch of diligence to validate that the people are trustworthy. But others look at that and say, oh, you can't feature a Nigerian company on your pitch deck for your fund, because people, if that looks bad, people just don't trust it, don't believe it. But that's the opportunity for those who are willing to open their eyes and look beyond. You have a chance to make money in a deal which others can't look at and wouldn't do. And supply and demand, economics 101, you make your best returns when you invest where capital is scarce.
We have a Chicago-based fund as well, Vested World, with Euler Bropley, who is investing all over Africa out of Chicago. And his LPs are largely U.S.-based and doing great. And, story after story about amazing entrepreneurs that he's been backing, developing and creating really transformational services and businesses in their respective countries. He's now, I believe, investing in about 4 countries in sub-Saharan Africa, but, businesses are really also showing tremendous growth.
Just to wrap this up here, let me just ask for the member, what is your advice to the members of the audience of things they can do to make a difference in the funding environment for entrepreneurs today?
I guess I'd say a couple of things. One, educate yourself. I mean, there is now a vast amount of both information and different approaches that can be used to address this. Specifically, in our case, I invite any fund manager that's raised at least 10% of their fund. If you're still thinking about it or mobilizing to do it, give us, wait a bit. But we would welcome your pledge. Among other things, we will provide a variety of support services to you and work to introduce you to relevant LPs and or other players who could be helpful. Also give you a platform, and most importantly, elevate the fact that you are funding female founders and gender diverse teams in your portfolio, which will help you attract deal flow.
Right.
Yeah, and I would say, for founders to go out and seek out the investors that are doing this work, that are, female led, that are, explicit about their DEI friendliness. That's something that people can do. With us, you can go in and sign the pledge to end startup redlining around the SEC accreditation. I wanted to mention in response to something you said, Kamal. Crowdfunding under the Jobs Act, really did open up some new opportunities, and a lot of people are pointing to that as a solution, but it doesn't address the friends and family round. It's really designed, and it's wonderful for companies that are growth stage. But when we look at, say, Reg D, where we see some of this separate and unequal, patterns happening for the idea and pre-seed stage companies, it's limited to 99 investors, where crowdfunding is not, and we really should look at changing that Rule 501 around accredited investors. And the SEC has to look at it every 4 years, but we don't have to wait 4 years for under Dodd-Frank to look at it. And so there is a petition. I recently put out an op-ed in Fortune magazine, and then also for VCs and LPs and others to sign those pledges. And as I mentioned before, there's a number of wonderful pledges out there, and some people are like, well, maybe they have pledge fatigue, but guess what? There's a way more fatigue of these founders that are out there doing the work, getting the results, and they're not having equitable treatment. And so I say, do the work, learn from the wisdom of the people who are out here curating the information for you. The least that you can do is sign a pledge, get behind it, open your hearts and minds to close these inefficiencies that are really holding us all back.
And I think that's a big point, that it's inefficient. It's not just unfair. It's a smart thing to do to, create a better returns for you. It's not just the right thing to do. It's the smart thing to do.
I should quote this. The Center for Global Policy Solutions pointed to over 9 million jobs and over 300 billion in collective net income that we are losing in the U.S. alone to discriminatory finance practices. And McKinsey came out with a study on closing the racial wealth gap and how that would contribute at least $1 trillion and 5 to 7% GDP to our economy within 10 years.
Both of you have said it far better than I could have said it. And thank you very much, Mariah, Shelley, for joining for this chat.
Thank you.
Thank you. Thanks for inviting us. Thank you.